Hi, everybody. I'm
Someone new.
Alec, and I'm going to introduce me and myself and my friends here in a few minutes. Let's wait for everybody to finish coming in. Give another couple minutes. So most of guys or people here know me, but I'll introduce myself. My name is Alec Pirhalo. I'm president of Infiniwiz, which is a local IT firm in Chicago here, and I'm facing the same issue with everybody else in this crisis as a small business owner, um, knowing what financial assistance is available and what do we need to do to get it. And I have a couple of my friends here, Avo and Ara. They are from the financial world and they have been involved in this topic very heavily. So they were kind enough to give this presentation to us. So I'll let them introduce themselves.
This is Ara Binderian. I run an investment advisory firm out of Chicago. We work with a select group of business owners focusing on cash flow planning, tax mitigation strategies, wealth protection, and life after work income plans. So we've been really reading up on this topic and talking to all the experts that we've got access to, and we've been trying to keep all of our clients informed. And Alec came up with a fantastic suggestion to present to you folks. So we're going to do that. We'll be pretty timely. We'll do it in about 30 minutes, maybe a little bit less, and leave an opportunity for questions at the end, and also an opportunity as we'll talk about some generalities today. And if you've got very specific questions that we can't answer here in the session, we'll send a link to be able to just contact us, book a quick 15-minute call with us, and we'll be able to get your specific questions answered. So thank you for being here, and I'm glad everybody's in good spirits and healthy.
All right. Can you guys hear me?
Oh, and just a quick note, as we're going through this presentation, please, as questions come up, feel free to enter them in the Q&A section, and we'll get to them at the end of session.
All right, great. Can you guys hear me?
Yes.
Yeah.
Okay. All right. Hi, my name is Avo Mavilian. I'm an enrolled agent practicing in front of the IRS. I do a lot of tax advice in addition to the wealth management. And we've been reading this text, gone through thousands of pages, conferred with our colleagues, some of the experts. We've been discussing with the different bank relationships that we have, how they're handling things. So what I'm going to do today is really share with you what we know, what our understanding is. Understand that this legislation came out less than a week ago. It was finalized. There were still some things still moving. Some things we've gotten clarity on. Some things we're still unclear about. We're waiting on guidance. So I'm going to do my best to share with you what I know, and then point you in the direction I think where we don't know the answers, we'll point you to go where. And I know everybody's really probably focused in on these loans that are going to start tomorrow. So I'm just going to go ahead and jump right in. Before I do, just real quick, I know you guys probably been on many webinars before. I'm going to speak in generalities. Please don't take this as tax advice or any kind of investment or legal advice. If you want to ask us specific questions, we're more than happy to do that offline. But for the purposes of this call, I'm going to do it in generalities, okay? So here's what we'll cover. The big one here are the loan programs. There are two loan programs, the EID disaster loan, the Paycheck Protection Program, and I'm going to go into details on these real quick. The employee sick leave, if you have employees that have left, how they're going to be taken care of, and the tax credits for FICA tax credits for employee retention. And we'll talk about some of the FICA taxes that are going to be the employer side taxes that you may be able to defer depending on which one of these assistance programs you take. There's a lot of different programs out there. It's really, really important that you understand the relationships, and I'm going to touch on them a little bit, but if you do some of them, you can't do the others, okay? So there's no double dipping. So it's really important that before you engage in any of these things, you have all the data that you need and you make a decision based on your individual business needs, okay? So here's the big picture. All of us are in small business here. The number one thing for us is cash flow management, right? And so when we're thinking about cash flow management, we're talking about an influx of money right now to come in to help offset some of the costs. Most of you, I'm sure, are also delaying non-essential expenses that's payable to people. One of the areas that I do want to talk about is those of you that are business owners on this call, if you have any kind of a defined benefit plan, you still have time potentially. If you need to freeze it for next year's contributions, you still have time. We're kind of coming close to a deadline on that. I don't want to spend too much time on it, but those of you that have pension obligations like the cash balance plan, this is something you ought to think about. If you have a direct contribution plan like a 401k, you can't freeze those, right? You could terminate them, you could not make payments, but that one, again, if you have a situation like that and you're worried about whether you have to make the safe harbor or not, we could talk about offline, but I want you to keep that in your mind. If you've been worried about that, there are some things that you could do to mitigate potential exposure down the line. The big thing everybody wants to talk about are the new forgivable loans to assist business, right? Basically, the government wants to give this money in your hand so that you keep operating. They don't want you to shut down. They don't want you to lay people off. They don't want you to reduce employee wages. That's the big picture. They're going to give you all the incentive in the world to keep employees on payroll. So if you've laid people off, they're going to give you a window to bring them back and still qualify for the forgiveness. If you've cut people's salaries, I know some big companies, what they've done is they've done it in the oil and gas business. They've said across the board, everybody gets a 30% pay cut. If you've done that, rather than terminating people, there's things that you could do to offset that as well. Okay. And then we talked a little bit about some of the FICA taxes. There's also tax relief to manage cash flows. So you basically hold off on some taxes and put the money back into running the business. And then there's also some additional considerations the business owners need to think about, especially in light of the fact that outside of these loans, and I got off the phone with a banker from Bank of America this morning, and he said they are not giving any more small business loans during this distressed time outside of what these programs are offering. So, you probably get hit all the time with your business banker wanting to give you a loan, right? What's the funny joke? Banks always want to give you money when you don't need it, and when you need it, it's not available. Well, if you're infusing personal wealth into your business, if you need capital outside of these loans, some of the areas you want to think about, I'm going to talk about, but sequencing and how you take it up becomes really important. So you might want to think about asset-based lending. You might want to think about taking money from cash value life insurance. If you've done it the right way, that's a terrific way to take money out, because otherwise, you might be tapping into assets that have come down in market value. You might want to, if you have machinery and equipment, you may want to look at some lease buybacks. And then the very last thing, that's kind of an emergency thing. If you need to tap into your qualified funds, so for example, your IRAs and such, they're allowing the waiver of the 10% penalty. You got 3 years to pay it back. And if you don't want to pay it back, you got 3 years. Well, you could recognize the income over a 3-year period. Again, this is just for information only, but there are some things for you to consider if these loans aren't enough to go on. One final thing on the big picture. One of the reasons that you want to get on top of these programs as soon as you can is, what if this thing goes longer than the 2.5 months or so? Then you're already in the program, right? So really, everything has been designed to try to keep your business going. So I want you to kind of keep that in mind. And I'll tell you right now, if your intention is to take money, lay off people, and use this just to hold back, it's not going to work. And I'll also tell you, misuse of these funds, the IRS is going to come down really hard on people on the back end. Okay, so that's kind of my warning on that one. So let's get right into it. Okay, so there are 2 types of loans that are going to be made available. Okay, 2 types of loans. The first one is the Economic Injury Disaster Loan. We call this EID. Okay, excuse me. And then the second one is, just for your reference, the EID loans, they've always been available. Typically, they're available when there's like a natural disaster in an area. For example, if a hurricane comes in through Houston, like Hurricane Harvey did, the federal government would declare Houston a disaster area. So everybody in Houston who's been impacted by it would be allowed to tap into these programs. The Paycheck Protection Program is specifically the legislation that came out last Friday in reaction to the coronavirus, okay? And this is the big one that everybody wants to jump on. I'm gonna talk about both here in a second, but these are the two big programs. There's a lot of confusion right now because some people say, hey, just go online and apply, but it's a different program than the one that the banks are gonna offer. So today we're gonna go ahead and give you some clarity on these programs. Okay, here we go. So the first one is the Economic Injury Disaster, the EID. This particular program is for disaster. So for example, all of a sudden, every single one of your clients stopped coming in. So let's assume you have a livery business and nobody is, using car service anymore, and you still have bills to pay. This is a disaster. You go on SBA.gov, it's directly from the SBA. You apply for a loan. They're gonna give you $10,000 to your business if you qualify. Well, if you meet the criteria, they're gonna give you $10,000 within 3 days into your bank account. They're gonna route it into your business banking account. You could, and then after that, you're gonna go ahead and apply for the loan, okay? You could get up to $2 million under this program. There is no personal guarantee for up to the first 200,000. It used to be 25,000, it's been lifted to 200,000. Once you get the loan approved, the interest rate that they're gonna charge you is 3.75%, and it's amortized, it could be amortized over 30 years, and the first payment is delayed for 6 months, okay? Here's the interesting that they're doing. When you apply for this program and they give you the $10,000 advance, and let's say afterwards they deny your loan because they say, hey, Alec, look, I see why you applied for this, but you have a lot of private assets that you could inject into the company. We're not gonna give you the loan. Even if they reject your loan, they're letting you keep the $10,000. Okay, you heard me right on this. Even if your loan is rejected later, they're letting you keep the $10,000 and it becomes a grant. You don't have to pay it back. Okay, so that's an emergency situation. Make sense? And I'm gonna talk about how this plays with the second one, but let me go to the second one and it'll all start making sense. In order for you to qualify for the EID, basically it's because you got impacted from end of February 1 through end of December of this year. You cannot have more than 500 employees, okay? There is a certain exception for restaurants, it's 500 per location, but I'm assuming everybody on this call has less than 500 employees. You could also be a sole proprietor or an independent contractor to qualify. So you don't necessarily have to have an S election on your for your business. Here's what you got to use this money for. Number one, if you have employees that are unable to work because they got the coronavirus, they left, you could use this money for that. You could use this money to pay your employees so you don't have to fire them, because let's say your business slowed down, the revenues are down 20%, but you don't want to fire your employees. You could use this money to pay their payroll, right? This way, the government's basically saying, don't get rid of them. Here, we're going to give you some assistance. If you are in the supply chain and your material cost went up in cost because of shortages, you could use this money to offset those costs. If you are renting a place of business, you could use this money to pay your rent, okay? And you could also use it for if you have old business loans that you had obligations to. So for example, you had a line of credit with a bank that you used to buy some equipment last year, and all of a sudden you got hit with this, revenues are down, but you still need to pay your payments. You could use this money to pay some obligations that because of the offset in revenue, okay? That's what you could use this money for. Now, that's the EID program. The Paycheck Protection Program, the PPP, although this is backed by the SBA, this one you have to get it from the bank, okay? This EID, you go to SBA.gov. This one, you're gonna go to the bank. All the banks are gonna start taking applications on this tomorrow, okay? From what we've gathered so far, Bank of America, Chase, some of the bigger names, you're only gonna be able to apply online, so you make sure that you have an online business profile with them. If you don't, you gotta set that up right away. You can't go into these branches. A lot of the branches are closed. They're not taking paper application, it's online, okay? After this call, we couldn't figure this out, but Alec is gonna email you the guidelines that we've got from the SBA, what the application looks like, the FAQs and so forth, Okay, so you go to the bank, you apply. You could get up to $10 million for this loan if it justifies it. These are non-recourse loans if it's used for covered expense. What do we mean by non-recourse? There is no personal guarantee on this, on the entire amount. If they give you the loan and you default on this loan, they won't come after you personally. That's what that means, okay? The interest rate, when they passed the law, it was no more than 4%. The SBA came out 2 days ago. They said the interest rate on this loan is half of 1%, okay? So pretty cheap. The loan matures in 2 years, okay? It's a 2-year note. The first payment is deferred for 6 months. So let's say you get $50,000 today. You're not making payments for 6 months from now. That's the first payment, okay? It's 100% guaranteed by the SBA. Not, doesn't really, we don't really care. It doesn't impact us. But there's no collateral that you have to put up. There's no personal guarantee, okay? And there's no borrower or lending fees payable to the SBA. There's no closing costs, okay? So the bank is not going to charge you. They shouldn't charge you, okay? Here's what you got to use this money for. Number one, if you have employees who got sick, their healthcare benefits, they have family leave, things of that nature, you could use this money for that portion. This money has to be used to pay employee salaries, commissions, or other compensation. So if you have salespeople that are your employees, but you have a base plus commission, or they're straight commission, you could use this money for that. Payment of interest on a mortgage obligation. So those of you that own a business and also own the building, if you have a mortgage, you could use this on the interest portion of the loan. And I'll talk about, since this came up, you should call your lender, and a lot of the banks are saying, okay, we'll forego paying mortgage for a couple of months. So you should also do that. But you could use this money to pay the interest portion. And obviously rent. If you're renting a workplace, you could use that. Utilities, so that's your phone, fax, electricity, water, whatever that you're paying for utilities. And then interest on any other debt like before that we discussed. So if you have that prior loan, you could use it for that amount as well, for the interest, okay? So the maximum, here's the formula. The maximum loan that you could get under this program, you have to take the average monthly expense of the covered expenses. So these are the items that qualify for covered expenses, okay, right here, okay? So you take the average costs, of the covered expenses, and you multiply that by 2.5, okay? That's the maximum loan amount that you could get. So let me give you an easy example. Let's assume that your average monthly expense is $10,000. You're gonna be able to get maximum loan of $25,000. Pretty straightforward, okay? 2.5 times. Now, there are some limitations into what you could consider for the wages. If you or an employee is making more than $100,000, okay, typically, let's say they're making $120,000 a year, okay, that's $10,000 a month. Because it's more than 100,000, we're gonna limit it to the first $100,000 of their income. So in this case, let's say you have an employee named Tom, he makes $120,000 a year or $10,000 a month. For the purposes of the loan, the maximum that you could calculate into the formula is 10,000 or 100,000 divided by 12, which is $8,333 a month, okay? The rest of his salary is not a covered expense, okay? If you use the money if you use the money for covered expenses, the loan may be forgiven, okay? This is the big thing. So if they give you this money and you use it for covered expenses, the portion that is covered, you don't have to pay that back. Not only do you not have to pay it back, but for tax purposes, the way we understand the law, it doesn't even count as income on your income statement, okay? It doesn't show up as income, it becomes a grant. But the expenses that you're paying, you still get to deduct it as an expense. So there's a tax benefit there, okay? So here's how they're gonna deal with the loan forgiveness. Once you get this money, the amount that you spent for covered expenses for the next 8 weeks, okay, 2 months, the next 8 weeks, that portion could be forgiven. Now remember what I said, the formula is the monthly average times 2.5, okay? But the forgiveness is for the next 8 weeks. So you could have a situation where you borrow 25,000, but in the next 2 weeks, you only use 20,000. The $20,000 is forgiven. The other 5 is not. If you don't need that 5, you give it right back. You close out the loan, no problem, okay? You close it out. The other thing is no more than 25% of the forgiven amount may be for non-covered costs, okay? So for example, you can't use more than 25% of the forgiven amount. So in this case, 20,000, 25% is 5,000. You can't use more than $5,000 for other things. So in our example, let's say you got $25,000, you use $20,000 for covered expenses, and then you use your other 5,000, and let's just say you used it to pay somebody else's salary who made more than 100,000 or some other reason. That's 25%. That's okay, right? It's that 5,000 is no more than 25% of the 20,000 that was covered. So you got to keep in mind what keep this in mind when you're deciding what to spend. Part of what they're doing is they're also giving you incentive not to fire employees. So if you retain your employees, this is what it's used for. You're supposed to use this money to pay employees. If you retain your employees, then it's forgiven. If you don't retain your employees, then they're going to reduce the percentage. They're going to reduce how much is forgiven by a percentage, okay? And I'm going to talk to you a little bit about what I've heard from the banks, how they're going to deal with this. And there's also, here's where the incentive to rehire employees comes in. So let's assume right now, today, you looked at your last month's books, you look at the orders coming in, and you're like, okay, I need to let go of some employees. If you get this loan, there is an incentive for you to hire these people back. And if you do it within a 30-day period, they'll exempt this reduction. So there are 2 different formulas. This is really important, guys. If one of the formulas is not favorable to you, you'll use the other formula, okay? So whatever works for you, that's the one you get to use. So here's the first formula. Let's assume, as we did before, that of the 25,000 you borrowed, 20,000 is the forgivable amount, okay? And let's assume that during the covered period, you have 18 employees. But in the previous period, we're going to look at is from February 15 of 2019 to June 30, 2019, you had 20 employees, okay? So you have 2 less employees today than what were the denominator that we're comparing against. Then what you would do is you would take the 20,000, multiply it by that fraction. So it's 9, so there's it's 90% employee ratio. So of the 20,000, 90% is forgivable. 10% is gone. So you eat the 10%, okay? Like I said, it's exempt if you rehire within 30 days. The second formula you could use is exactly the same, except the covered period now is from January 1 of this year until February 29 of this year. So let's assume in this case, you still have 18 employees, but in this period, this year, you just happen to have less employees because your employee left last December. So as to not hold that against you, in this case, let's say this is your situation, 18 divided 18 is 1. There is no reduction in the forgiveness formula, okay? So use the formula that works best for you depending on your situation. Again, if you have laid people off, there is the exemption to hire them back in 30 days, okay? The other thing, as I mentioned, is if you reduce their salary. If you reduce their salary by more than 25%, then it's not forgivable, okay? It's not forgivable. And obviously, the other thing that's not forgivable is wages on anyone who made more than $100,000, okay? So just the first $100,000. Okay, so before I go to the next part, so let me talk about the loan programs. So if you do the EID loan, where they give you the $10,000 advance, later on, you're still gonna have to complete the application to finish that application. Remember, on that first one, only that first $10,000 is forgivable. Everything above that, you may need a personal guarantee if it's over $200,000. It's 3.75%. Yes, it's 30 years, but you have to pay that back. If you did the first one and you got the 10,000 advance, there is nothing preventing you from also applying for this one. If you apply for both, and they give you this PPP, then that 10,000 will be deducted from the amount that they give you for the PPP. Okay? So those of you that need the money for the 2.5 months, but you don't need the 10,000 capital infusion right away, and you don't want to fill out 2 different applications, you could just apply for this one. Those of you that are in dire straits and need that, then you apply for the first and the second. Okay? And we could talk about different strategies as far as what makes sense, but understand, if you get the money on the first one, you can't get that forgiven and everything on the PPP. There's some overlap there. Okay. If you have an employee that left you, so you're paying their salary, you haven't laid them off, but they got sick, they've been ordered to be quarantined, or they have a family member who's been quarantined and they have to go take care of them, or school, like all of us, schools have closed down and they have to leave work. They can't work to go be with their family, okay? If you have that situation, there is a tax credit against the payroll taxes that you paid for them. So that your portion of the FICA, right? You could get a tax credit against that, okay? If the payroll tax that you paid is less than the credit for the quarter, then you're gonna have to wait until the next quarter to get the money back. So this is more of a delayed benefit. Here's an example. Let's say you have an employee and you make $300 in FICA contributions for them this quarter, and the tax credit is $1,000. Well, the amount that the credit is more than the money you put in, so you can't get that money back. You're gonna have to wait until the next quarter, okay? This could be problematic for those of you that have a lot of employees, okay? So you got to take a look at this, okay? So there's also credits that are given for retaining employees, okay? But if you do this, if you take this credit, you cannot, and I repeat, if you do this one, you cannot have your loan forgiven, okay? You can't participate in both. It's one or the other, okay? So those of you that are not getting a loan, this could potentially apply to you, okay? So if your business is suspended, I see a typo there. If your business is suspended in order to, or ordered to stop, or there's a significant drop in gross revenue, okay? So imagine, like let's say 50% of your business stopped. Let's say you're a livery business and there's no customers, okay? And let's say you have employee payroll. Then what happens there is you're gonna get a credit against employment taxes that you paid for your employees. So 50% of qualified wages up to $10,000 or a maximum of $5,000, okay? You could get that as a credit. But like I said, you can't do this if you're taking loan forgiveness. That $5,000 is a credit against FICA you paid, okay? So if you didn't pay that, you don't get more money back. The reality is, 99% of business owners, they're gonna do the loan forgiveness versus this. But I just wanted to mention this just in case you were the exception. The other thing you could do is, what they're saying is, if you have employees, and what we're gonna do to help with cash flow, you don't have to make the FICA payments. We're gonna delay that for 2 years. Half of it, you're not gonna have to pay until December 2021. The other half paid by December 2020. So you could have a situation, guys, if you're making bi-weekly payments into the FICA for your employees and it's not being remitted to the IRS, it's sitting there in a bank account. If you're using a payroll company and it's accruing all this money, remember, at some point, a year and 2 years from now, it's gonna have to remit it to the IRS. But if it's sitting there with a payroll company and that payroll company goes bankrupt, your money might disappear or at least not be available until the Bankruptcy Act or somehow you get to it, but the IRS is still gonna want their money and they're gonna come cracking hard. What we've been telling our clients to do is, if you find yourself in this situation, it's talk to your CPA. This is where the CPAs come in. They're very helpful here. You probably want to set up a separate bank account that you can make these payments to that holds it for you, but it's under your control. That way, the money's there, okay? I would be very careful in delaying these payments if it builds up a lot and it's with a third party. I would be very, very wary with that. Okay. Here's another big thing. When the Tax Cuts and Jobs Act passed a few years ago, we limited how much net operating losses you could take backwards, right? No more going backwards, and you could carry forward for 20 years. For 2018 and 2019, they're going to allow you to take it back 5 years. This is a pretty big deal. This is, again, talk to your CPA about this. But you know, if you had if you need to amend last year's return and get a refund, you know, this might be something you might want to consider. And they also took out the 80% cap, so you could take 100% against income on the NOL. Okay, so these are the big issues here. I think what most people are going to do is do the PPP loan. The way we've been advising our own clients is basically, here's the questions that I've been asking. Number one, okay, have you seen an impact to your business? And obviously a lot of them is yes. Some of it is, my billings are okay, but it's because they were for work performed previous months. The whole point of this program, all these programs, is if there's economic uncertainty, if you see sales slowing down, if you feel like, hey, there's uncertainty, they want you to take this money, keep employees, and run the business and pay your rent. So, the landlords, if there's any landlords out here, we had a question come up earlier before this call, and I had to do some research on this. But what's happening is, if you can't pay your rent, landlords are incentivizing their tenants to go and apply for these loans so that they get the loan, they pay the landlord, and the landlord's not out of money. If you are in the real estate business and you're a landlord, so based on what I read in the 10 minutes before this call, it's a little complicated. For example, if you operate, let's say, an apartment building, but you use a management company, technically you don't have employees, right? The management company does. We don't have guidance on this because the law passed so fast. It's a gray area at this point. So should you apply? I don't know if, there isn't any restriction that says don't apply, but I don't know the answer. And so without any guidance, I would, if somebody were to ask me, what should I do? I would say, go through the process, see what they say. But it's a very sticky situation for those people that own apartment buildings and who have, consumers rather than businesses. Because with the businesses, you could incentivize them to go get these loans and come back and pay. Okay, so that's the overview. Couple of things, and then let's open up to the questions. Here's my contact information. If you have any questions, we're going to make ourselves available. I got 15-minute blocks that we set up. If you have specific questions, go on that link down there. I'm sorry it's not clickable, but get on the calendar and we'll set up 15-minute increments. If you have specific questions that are not in general, if you have something specific that we can't answer on this call, we'll make ourselves available. With
I put the link on the chat for everybody. Great. They can click on that too. Yeah. So I guess we can open it up for questions, right? Yeah. Alec, if you had some that you wanted to start with, or if anybody in the chat wants to go ask some questions, go ahead.
So most of the questions are in the Q&A, but there was one that Felix asked. He was kind of first, but what he asked was, is there information how businesses with under 50 employees can apply to be exempt from HR 6201?
There is information that the SBA has been putting out there. What I would refer you to is the IRS's website. And with that specific question, we could actually go through the text after this and go look through it. And if we find the FAQ, because SBA and IRS put out a FAQ, and if you go to the irs.gov, there should be an FAQ section there. Okay, but if you can't find it, I'm happy to look into that after this call. And we're also, like I said, after this call, Alec is going to email the FAQs that the SBA provided to the banks, so you could get some more information over there. I don't know if they're going to cover that specific topic, but we could look it up.
Next question. So this one was uploaded by Raymond. I applied for the disaster loan already. Have not heard anything, but I'm also applying for the CARES loan for payroll. Do you see a problem?
Yes. Not at all. So go back to what I said earlier. When did you apply? If you within 3 days from the date you applied, the advance should be in your bank. Once that comes in, you also apply for the PPP, the payroll, the CARES Act, the Triple P program. When you get approved for the PPP program on the application, and you'll see the application when Alex mails it out, there's a section that says, have you also applied under EID? You check that yes, and then whatever you're going to qualify for, they'll subtract the $10,000 from. Okay, so on the EID that you applied for, Raymond, they're going to put $10,000 in your business banking account within 3 days of you completing the initial information fill. When you fill out the PPP application, you're going to check yes to having applied to the EID. And then when they approve the PPP loan, let's say you're going to get 30,000, they're going to give you 20 because you already got the 10.
So the sequence that we should go in, I guess, is apply online to SBA first and then go for PPP. Is that what you're suggesting?
No, you could do that. Like in this case, I know a lot of people went and did the EID and are going to do the PPP. There's no problem there. The only thing is going to happen, and I don't know if there's guidance on this yet, but I don't know if you apply for the PPP as well, if they're going to still have you complete the EID application. Okay, because the EID is for disaster, whereas PPP is specifically for this, right? And so there is no harm if you qualify for the disaster, because there's a checklist, right? It says, are you eligible based on this? You could do both, but if the amount that you're taking, the amount that ultimately you're going to end up with is the same, because if they give you the 10,000 up front, they're going to deduct it from what they give you from the PPP. So the people that should be applying for the EID are people that are really in a disaster area, meaning there's no cash flow, they got bills to pay, and it's a problem. They need that $10,000 right now. Sure, you could do that. But if you're anticipating, hey, at the end of the month, I'm going to need some cash flow, then you could just save yourself, do one application and go through the Triple P program. But if you were to do in sequence, Alec, you're right. You do the EID first and then the PPP.
But they're basically, they are using similar guidelines to approve for both.
The guidelines are similar, but the terms are different, right?
Right.
With the PPP, yeah, exactly. The terms are a little different. So depending on the amount that you're asking for, sure. But if you've already applied, you've already applied. There's no issue there.
Got it. And a question from Jeff. I did a furlough 2 weeks ago. I'm not sure what that is. When do I have to recall them to be able to apply funds from PPP?
30 days. Yeah, it's 30. It's the way I understand it's within 30 days of getting the loan approved. But we could double check that to make sure it's that and not from when you left them. But there's a 30-day window. So if it was 2 weeks ago, it's either within the next 2 weeks or from when you get the loan. So hopefully, if you apply tomorrow, hopefully you get the loan before the next 2 weeks. So you'd probably want to hire them back right away. And if you furloughed them, I don't know if that counts as a reduction in salary, because if you're still paying them, technically, depending on how you furloughed them.
Question from Max. They define small businesses as under 500 employees. We have 900 plus employees, but most of them are part-time. If we calculate full-time equivalent, we would be 300 or so. Is that accurate, would you say?
That's a good question. I don't know.
Yeah,
I know for the calculation of the forgiveness, we look at full-time employees, not part-time. But I know for covered expenses, you can use the money to pay part-time employees, certain independent contractors. But that's a fantastic question that we got to look at the definition of what they mean for the purposes of this particular loan.
Well, can we check into this afterward and just email?
Absolutely.
Yeah. Okay.
Absolutely. Yeah.
So I'll just mark that for later. And another question is, what if an employee is getting auto allowance as part of their compensation package? Do we include that?
What's an auto allowance? You're talking about like, oh, car allowance. Okay. It's certain commissions and benefits. Specifically on auto, I got to go back and look at if it falls under that definition, but I would assume it does, but I don't know. This is a good time to bring up the loan forgiveness. This is very important, guys. So what the SBA has said is it's going to be up to each bank, each lender to determine the forgiveness. So they're basically passing the responsibility of forgiving the loan to the bank. Okay. So it's going to be I would encourage you keep really good records of how the money is being used. Okay. Keep very good records. Number one. Number two, you might have one bank be treated one way. You could have another bank treat it differently. Okay. So I would be, before you use the money, at some point when you get the loan and when you use the money for forgiveness purposes, I'm pretty sure we'll have some guidelines come out, some more clarifications, okay? And hopefully by then this will answer these questions. But just keep in mind that, it's gonna be up to the different banks as to their interpretation. So if you have a good working relationship with your banker, after you get this loan, this is the time to rely on them and say, hey, how are you guys treating these?
Next question was, if a corporation has no employees, just uses contractors, are payments to 1099 contractors forgiven, or it's strictly employees?
No, so independent contractors, sole proprietors, and if you give 1099s and they're an integral part of your business, it is considered part of the payroll wages. So again, on this one, you could, when you apply for it, if like I said, so let's say you have somebody that is a purely independent contractor, but they're with you just like an employee, right? It's not a one-off. Then they should be included in this.
Okay, I think that's pretty much wraps up our questions, unless somebody has anything else.
Yeah. One thing I want to let you guys know is this. Even the bankers that we've spoken to, they don't even know the answers at this point to how it's going to be treated. I talked to one of the banks right before this call. They said, hey, we've been told just go online. We're not taking paper. Some banks, smaller banks may require paper. But as more information comes out, we'll find out. You should apply based on what your understanding is. When it comes to the forgiveness, that's going to happen later. So hopefully by that time, there's more guidance and there's more clearance. So one thing I want to mention too, when the banks start taking applications tomorrow, what you need to be doing today is the following. Number one, get copies of your driver's license. They might want to have that. If you have payroll, get your 940 and 941 from your CPA, okay? Have that ready. Have your tax returns or your EIN letter that says, yes, this is the company that I have. My understanding is they're loosening the documentation requirement. They're not going to ask for 3 years of tax returns, but maybe they'll ask for 1 year. Have your P&L statement, balance sheet, have everything just like you would for a regular loan, just in case, right? Because what's going to happen is each bank has set aside certain amount of money for this, okay? The SBA has not given them the money. So you might have a community bank that has set aside $100 million for this program, and then you might have a big bank that's set aside $200 million. You might have somebody that's only set aside $20 million. Here's why I'm telling you this. Some banks are only going to be taking care of their own clients. I know one bank here locally that said only their clients that have existing relationships, okay? This is on a first come, first serve basis. Does that mean that people are going to run out of money? No, but what it means is you might get delayed until the next wave or so. So it's really important that you're prepared come tomorrow. By this weekend, you should have this application, and in my opinion, okay? In my opinion, you should have this ready to go. If for whatever reason your bank is not participating in the Triple P program, we have a couple of resources, a couple of banks that are willing to take on clients that don't have an existing relationship. But that should be your backup, okay? That's the worst case scenario. If you need one of those, let us know and we'll put you in touch with a couple of those banks. Okay?
Okay.
All right. Hopefully you guys found it useful. We're available to answer questions specifically, so we're around. We're super busy, but we can certainly make some time. Make sure you book something if you want to talk to us specifically. Alec, hopefully this was what you were looking for your crew. But yeah, Avo, thank you for putting it together. Very nice work.
Yes, totally appreciate it. Thank you guys for making this happen. It's very useful, I think. I'm recording it, so I will send the recording to everybody as well. And there's a few questions that needed research. We'll get in touch with those people as well.
Yep.
So thank you, everybody. Thank you for coming along to this.
Thank you, everyone. Be safe and healthy. Thanks.